A lot of what's going on right now is about the U.S. equity market, a market that many have been fearing would start to finally roll over after rallying for a decade and posting record highs since 2013. Policy normalization has reached levels where it actually means something in 2018, and investors are heading for the exits. Throw in the added downside risk out there as the global trade war tension heats up, and it doesn't seem like there will be much room for anything but a deeper setback from current levels, which might play out over the coming weeks and months. All of this has spilled over into currency markets where the US dollar has been better bid. It seems the dollar's favorable yield differential and traditional safety appeal are both factoring into flow at the same time. On Wednesday, US equity futures were trying to do their best to see if they could hold up, and this was a help to the more risk-correlated commodity currencies, with Aussie and Kiwi reluctant to participate in another dollar buying run against the major currencies, with the euro and pound sliding to multi-session lows. Both the euro and pound are dealing with some of their own risk, with Italian budget drama and the Brexit overhang making these guys even less attractive. And as far as the euro goes, Wednesday, ugly Eurozone PMI reads didn't help the single currency, which dropped back into the 113s within a stone's throw of the 2018 low from August. And yet, even with all of this, we continue to warn against expectations the euro and pound will underperform medium to longer term, especially with the outlook for equities where it is right now and U.S. trade policy not welcoming of a stronger dollar. Let's not forget what will likely be a Fed that is forced to scale back its normalization on account of the deterioration in risk sentiment, which should make those dollar yield differentials less attractive. Elsewhere, the Canadian dollar was in the process of digesting the latest Bank of Canada decision, which produced the expected rate hike, though there wasn't any selling of the fact in the immediate aftermath, with the loonie actually rallying on a more upbeat, hawkish-leaning monetary policy statement. This was all ahead of the Bank of Canada press conference, and we wonder if there will be any backtracking, with oil coming under pressure of late, Canada data showing a bit of weakness and risk sentiment in deterioration mode overall. The pound was waiting for some color on the latest meet between Theresa May and her party on the Brexit strategy. Looking ahead, Thursday's calendar will be an active one, with the ECB decision due. Early on, we get Kiwi trade, followed by other standouts on the day that include German IFO readings, U.S. initial jobless claims, durable goods, and pending home sales. That's all for now.